how else better to learn about the culture of a community than to own a property inside of a community? What is the model of the operator, right? Like our model as an operator is to make communities better, right?
Those local operators, those local owners they were able to create that culture of community. Coming to you from the mobile home park capital of New York City, Staten Island. This is the Mobile Home Park Exchange podcast. I'm your host, Frank Rizzo. Joining me is my co-host and my partner, Eric Busatil. Eric, how are you today?
I'm doing great today, Frank.
You do look like you're doing great. You've got a new ensemble. You're all in red, and you don't usually do that, Eric.
Just a color.
What brought it on? I'm just curious.
I don't know, Frank. I don't know. It's in my closet.
Was it like a new holiday present that you just wanted to work into the rotation?
I've had this for quite some time.
Okay, great. Great. Like to hear it. We're really excited today. I think we're going to have an interesting program because this is something that has been asked of me, and not just recently. Going back, Eric, and we were talking at the beginning of the year. I've been in this space for over 11 years, and together we've been in this space 7 years now. It essentially makes us like grizzled veterans at this point. I still feel like I'm learning something new every day, and I'm still I think probably more motivated to continue to improve the communities we're involved with today than I was when I started.
We always speak about this being an operator space. Every community always has something different happening, right? It's been put together different. There's different types of utilities on each of these communities. We have a different plan for every community. So yes, we're always learning something different.
And one of the things that I've gotten from people who aren't in the space, they say, they want to get in. I mean, people realize right now we have an affordability crisis across the country.
Correct.
It is reached epic proportions. And what that's done...
A housing affordability.
Housing
crisis.
affordability.
Yep.
Housing affordability across the country has reached epic proportions. Rates are high. Pricing of housing, traditional stick-built housing, is high. It's caused a lot of people to revisit the manufactured housing space and look at manufactured housing as really an option to solve this crisis.
And not only the prices of homes have gone up, Frank, rents have gone up exponentially as well. And yes, these manufactured homes there's an increasing, growing demand. And I feel that this space is the right space to be in, and there's going to be a continued growing demand.
And so what's happened, and because of exactly what you said, we've had a number of people come to us say, I want to get involved in the space. They realize, listen, if you're a real estate investor, or we're all the CEO of Me Inc., right? Our jobs are to deploy our own capital. And so you want to be invested in markets that are growing. And we realize that affordable housing is a growing market and there's a demand for it. So that's a subsector of the market that you've got to have some exposure to. So people say, I want to get involved in the mobile home park space or the manufactured housing space, but I don't necessarily want to own a park. Right? Or I don't know if I can own a park by myself. I don't know if I'm ready for that yet. So we're going to discuss today the top 3 ways you can get involved in the mobile home park space without owning a mobile home park. How about that?
Okay, I like it.
Are you ready for that?
I'm ready.
Did you have your coffee?
I have my coffee.
Okay. Let's talk about the first way that you can get involved in the manufactured housing space, or you can get involved in the mobile home park space without actually owning the park. What do you think the first way is?
The first way, Frank, and the easiest way is to focus on owning a home first. Great way for you to, learn about the space. I mean, we always talk about the culture of a community, right? So how else better to learn about the culture of a community than to own a property inside of a community? And I remember when we first bought these parks, we were gung-ho against people buying homes in our community and then re-renting them, right? And over the last, I would say, few years, the term Lonnie dealer has become a talked about, term, and there's a growing population of Lonnie dealers, and a Lonnie dealer is someone who owns a home inside of a community and re-rents it as an investment. We started to work with Lonnie dealers, and it's worked out for us, and I'm starting to actually have some relationships with these investors who didn't want to participate in owning a community, but they still wanted to be involved, and they're still interested in real estate. And it's also a very inexpensive way to penetrate into real estate in general, right?
Great point.
We have homes that go anywhere from $5,000 all the way up to newer home where it's $40,000, $50,000. If you're looking, and especially if you're someone handy, right, and you're someone who wants to buy a home, fix up a home yourself, and then re-rent it, it is the absolute perfect way for someone to participate in real estate, and get involved in the MHP space at the same time.
Eric, you hit the nail on the head. And when I first got involved in this space, if you had a park that had Lonnie dealers in it, you were a little concerned, because the Lonnie dealer, the reputation that preceded the Lonnie dealer was they would put anybody in your community, they wouldn't follow community rules, and you would have a difficulty dealing with their end user tenant. Now, because of a whole new generation of Lonnie dealers who have gotten involved, right, a whole new class of people have stepped into the game through that mechanism. They realize the value of following and working with the community owner and following the community rules, making sure that both parties approve the resident. And you hit the nail on the head. It is a great way to get a fantastic return on investment. I'll give you a case in point. Recent home, right, that we just purchased from a community, $7,500 purchase price. We're reselling on a rent-to-own that same home after doing a cleanup. So we're going to spend about $1,000 in the cleanup. So that's $8,500 in. We're selling the home on an RTO for $15,000 after the down payment, and you're collecting the lot rent is $300 a month. The rent-to-own payment is $800 all in. So the consumer is paying, the end user is paying $800 all in. You're collecting $500 a month, right? Over 12 months, that's $6,000. Your initial investment was $8,500. That is a fantastic return on investment. And you're going to have that note. They're going to have that note for 6 years. You're going to make your money back within 2 years. You're going to continue to drive in income. And that is a surefire way to create cash flow and get yourself in the mobile home park game.
And let's not discount the fact that it's just in comparison to other asset classes, it's extremely low risk, right? Especially if you're doing one or two of these homes. So for the amount of money you could make, it's considerably. I've never heard of you being able to invest, $15,000 to $20,000, own real estate, own a piece of property, own, something that you could rent out and make $500 a month.
And you learn the space. And you learn the space. You learn what makes the community work and not, and then you could take that next step. So that's a great entryway into the manufactured housing space. Let's look at number two. And I'm going to preface this by saying I am not a financial advisor, so I'm not telling anybody, I'm not recommending, a specific financial plan for them. But the number two way that you could enter into or participate in the manufactured housing space, have that as part of your portfolio and participate in affordable housing, which we know is a growing demand. What do you think that is?
You could probably invest, you could invest in a publicly traded company.
Correct.
Right? That specializes or invests in MHP.
Correct. There's three operators in particular that are publicly traded. Two of them are in the New York. I think one of them is on the NASDAQ. You could take a look if that's what you want to do, and that's a great way to get yourself some familiarity with the space. Those companies are paying dividends, so you get a yield on that. You get upside or appreciation in the stock. You could figure out which one is the right one for you if you want to go that way. But that's a great entranceway. Additionally, there's some manufactured housing builders that are also publicly traded. You could take a look at that and see if that one's right for you. Before doing that, obviously, if you have a financial advisor, talk to your financial advisor, make sure it fits the profile. I would highly recommend you check their income statements and their balance sheets to get an idea of what they're doing so you have clear vision. But that is another way where you don't have the operational risk of owning a community, but Sun Communities, Equity Lifestyle, I mean, they're two of the biggest players in the space, and you could participate alongside them.
Absolutely.
Lastly, here's the third way where you can get a little bit more knowledge, I would say, depending on who you're with, on operating a community. But the third way that you can participate or get involved in the manufactured housing space, if you're looking to invest in the manufactured housing space,
would be to participate with an operator.
Correct.
Directly.
Correct. You can find, I mean, look, in the last few years, there's been a number of sponsors that have entered into the arena. And we've done this, you put out either a platform or an opportunity for people to participate in. And there's a number of different operators that have done this, and they offer accredited investors an opportunity to participate and invest alongside of them in their deals or in their platform. Right? It depends on which way you want to go. And that's a good way to get involved as well. You can select an operator or a group of operators to do that. But I would preface that if you're going to do that, don't just take any operator. Or don't just take any sponsor. And I think what gets people caught up, people like to talk about what are these, people like to talk about their returns.
Absolutely.
Right. Then they hawk on, but I think you got to do a deeper dive than just the returns. I think that's important. You want to see, hey, does this operator do they have proof of concept? Like, what have they purchased? What have they seen to exit or disposition? What was the hold period? How did that look against their original assumptions?
What is the model of the operator, right? Like, our model as an operator is to make communities better, right? We go into a community that has been, sitting there for a while, or it's been in the family for multi-generations, and it's lacked money going back into it, where it just needs to be picked back up. I mean, we find these communities and we bring back life into them. We breathe life back into them, ultimately making these communities better, right? And I think people need to know what an operator does, right? And I think that's super important, Frank, if that's what you're talking about right now.
And there's a difference and I think one of the things that we learned very early on, and we spoke about it previously, if you want to control the product, you have to control the process. One of the keynotes to what we tell our residents, we're not local, we're very hands-on, and we touch them constantly throughout the month. We've seen in the last 3-4 years, this became a space where a lot of people, they got interested in because of the affordability crisis, because rents were accelerating. They revisited the manufactured housing space, and a lot of people came in and they poured money into it. Some of these people were not built to own and operate it. They hired third-party managers to do the dirty work, so to speak. But when you do that, that raises the operational costs. And I'll give you for instance, we actually sold a park to one of those companies that were operating with third party. And when we looked at the cost in their underwriting of what they were paying to infill a lot, at that time, they were paying $15,600 to infill a lot. Eric, for us, when we infill a lot, meaning we bring a home in, we connect the electric, the plumbing, the skirting, the deck, how much does our average cost? Somewhere
between $8,000 to $12,000, I think, is about what we're spending.
Depending on the grade of the land, but they were paying $15,600. And why is that important? When rates are 3%, you can eat that number. You could probably eat that number in there. But when rates aren't 3% and money costs, 8%, 9%, every dollar, every penny counts. And you have to be able, this is a business of nickels and dimes, and you have to be able to drive those costs down. That's key. And the second thing that we've seen is you have some operators who took the model of, I don't really need a on-site team. I need a sheriff, right? I need somebody to come in and just kind of watch the community, and people own their homes and they'll just police themselves, and I'll be able to I have a sticky resident, right? It's a mobile home, but it's not very mobile. So I have a sticky resident, and as long as I have a sheriff that kind of keeps people in line, everything will run by itself. And I think that's the common misconception or the myth about this space. And I find that that's wrong. You'll find in when you own these communities, the residents are probably more vested in the community than some of these owners, right? They have their biggest asset, their home, placed there. They're very vested and tied in. And in what those local operators, those local owners did, they able to create that culture of community, whether it's because they were there, right? They were watching, or they felt that closeness with the ownership. Like they felt that the owner was vested in there, which allowed them to maybe live in situations that, maybe the roads weren't paved, maybe there was no lighting, but they felt the closeness or camaraderie with the owner because they were vested. And when you take it and you shift that model saying, I just need a sheriff and I'm going to be an absentee owner, you know what you end up losing? You end up losing that tie-in and that buy-in from the resident. And that's something, and I would say of all the things that we've accomplished in the last 11 years, that's probably what I'm most proud of, is that we've been able to maintain that culture or that inside of those communities because quite frankly, we've worked at it.
Well, I mean, you have to work with your staff. You have to develop the culture, and you have to teach your staff the culture that you're looking to, portray into the community. And then your on-site people have to buy in, right? And they have to, they have to know what you're looking to do, and it then results on the residents, understanding the culture and buying into the culture.
And I think one of the things that we did that really helped us and propel us, right, is the remote capabilities that we had. So we've been able to touch the residents throughout the course of the month, right, remotely and at a cost savings, so we can drive that savings down to the income statement, right? So we're able to do a lot of things that the local owner was able to do. We can do that remotely, but without that same cost, which is so important. So if you're looking at an operator or you're looking for a sponsor to back, those are some of the questions that you have to ask. How do you operate your community? What do you do to drive down costs? What's your average operating expense ratio? What do you target? And how do you get there, right? That is, sometimes gets lost in the fact, right? Because we have seen in the last few years, equity values increase across the board. But I would, if I was looking at a sponsor, ask those questions of, hey, what have you done? How do you operate your communities? How is that structured and laid out? Are you hiring third party? Do you do it in-house? If you do it in-house, how do you have your staff trained? What kind of culture do you bring down to the ground? Because at the end of the day, if your end customer isn't happy with the product, you're going to lose.
Great information, Frank.
In one last thing that I would ask, especially now, super important, see if whoever you're going to speak to, right, or if you're looking at a sponsor, if they've had a capital call in the last 24 months, or if they're on the verge of any capital calls, right, what their debt situation is. That's super important. We're seeing a lot of sponsors right now. I think we had one of our clients come to us and tell us that they're involved in 60 partnerships like this, and they had 40 of them had capital calls in the last 12 months. So that's very important. Find out what they're doing and what kind of capital reserves. That's super important information to have. But those are your three ways that you can participate in probably the most predictable, growing, and essential sector of the real estate market, affordable housing, and with that, manufactured housing space without necessarily owning a park. Number one, look at buying a home yourself. That's a great entryway. Number two, you could look at the public markets as an option. You know, there's a couple of publicly traded companies. Find out which one best suits your profile, which one's right for you. And then lastly, find a sponsor and operator that you have confidence in. See if you can get involved in one of their next projects or their platform and participate with them. And also see what kind of information they're going to give you other than, hey, I've gotten your investment and here's your check. See if they're willing to have you go on site, have you, walk the earth with them and participate in the process, right? So those are the three ways you can do it. If you have any questions further to see how you can get involved in the MHP space, why don't you reach out to us? There's a link below. Watch us on YouTube. You could send us a message, right, on one of the platforms, whether it's Instagram, whether it's LinkedIn. We'd love to share that and hear your thoughts. I'm Frank Rizzo. Joining me, of course, my partner, Eric Busatel in red. I actually like you in red today, Eric. It brings out your hair. Until next time, this is the Mobile Home Park Exchange podcast. Check us out at the mhpexchange.com. Talk to you soon.
Talk to you soon.